So you think day trading is all about predicting the future, right? Well, what if I told you you're in for a pretty big surprise? In this explainer, we're going to tear down that idea and show you the counterintuitive secret that professional traders live by. Get ready because we're about to show you how the best in the business actually win by losing. Okay, let's dive right in.
Let's just kick things off with this idea, which pretty much flips everything you might believe about the markets completely upside down. The whole premise here is that being a successful trader has absolutely nothing to do with being a fortune teller. Honestly, this is the single most important concept we're going to cover. So if it's not about being right, what on earth is it about?
Take a look at this number, 36%. This was the actual win rate of a consistently profitable trader over a 3-month period. Let that sink in. That means they were wrong almost 7 out of every 10 times they placed a trade. How is that even possible? How do you lose that often and still make money? Well, that's the secret we're unpacking today.
And this brings us right to our first section, the winning by losing secret. You see, that 36% win rate, that's not a bug. It's a feature. It's part of a system that's built on simple, powerful mathematics, not on some magical ability to guess which way the market's going to go. So here's the crucial mind shift. The market is just data. It's random noise reflecting millions of human decisions. Your job as a trader isn't to predict that chaos. Not at all. Your job is to be an engineer. You're building a machine, a system with a strict set of rules that can filter through all that noise to find very specific opportunities where the odds, over time, are just slightly in your favor. So, what do you actually need to build this machine? Well, the parts are probably a lot simpler than you think. Let's move on and take a look at the essential trader's toolkit.
You really only need 3 basic things. First, you need charting software, something like TradingView. Think of this as your workbench. Second, you need a broker or an exchange. That's just the place where you actually execute the trades. And third, a trade journal. And listen, this one is absolutely non-negotiable. It's where you track all your data to see if your machine is actually working the way you designed it to.
All right, so we've got our tools. Now it's time to actually start decoding what's happening on the charts. But we have to keep that main idea front and center, right? This isn't about looking into a crystal ball. It's about spotting very specific situations where you can clearly define your potential reward and, way more importantly, your potential risk. The most basic building block you'll see on any chart is the candlestick. Really, each one just tells the story of the fight between buyers and sellers over a specific chunk of time. Could be a minute, could be a day. It shows you where the price opened, where it closed, and the highest and lowest points it hit. That's all it is. It's just a way to organize the chaos. And this right here is the real goal of chart analysis. You're not looking for guarantees, because there aren't any. You're hunting for key areas, places where there's a clear imbalance between buyers and sellers, where you can confidently say, okay, if I get in here, I know exactly how much I'm willing to lose if this doesn't work out. Risk always, always comes first. Okay, here it is. This is the core of everything. The math of profitability. This is the aha moment, the simple logic that solves that whole paradox we started with. This is what separates professional trading from just straight-up gambling. So let's put the question right back on the table. How in the world can you be wrong so often, nearly 7 out of 10 times, and not just survive, but actually come out ahead? The answer lies in one simple but incredibly powerful concept. And that concept is what pros call your risk unit, or just R for short. It works like this. Before you even think about entering a trade, you decide on a fixed dollar amount you're willing to lose. Let's just say it's $100. That $100 is 1 R. From now on, every single loss is capped. It's exactly -1 R. But your wins? Your wins are where the magic happens. They can be 2 R, 3 R, 5 R, or even more. And this chart just lays it all out perfectly. Look at this. Over a sample of 10 trades, you've got 7 losers. Ouch, that's -7 R, so you're down $700. But your 3 winning trades didn't just make you 1 R each. They were big winners. They brought in a combined total of plus 10.8 R. You do the simple math, and you're left with a net profit of 3.8 R. You won by losing? This little table makes it even clearer. Your win rate and your risk-to-reward ratio are totally connected. You can't think about one without the other. Look at that highlighted row. If your average winning trade is more than 3 times bigger than your average losing trade, you can have a win rate as low as 30% and still be profitable. That's the engine inside your trading machine. And this This completely flips the script on what a good trade even is. A good trade is not one that made money. A good trade is one where you followed your plan, followed your rules perfectly, controlled your risk, and accepted whatever happened. A bad trade is breaking your rules, even if you got lucky and it made money, because that's a habit that will eventually blow you up.
Okay, so that's the theory. But how do you actually do this? How do you put it all together? Let's turn this idea into a concrete, actionable, 4-step plan to build your own trading business.
It really comes down to 4 simple steps. First, you have to be a detective. Just observe the charts and look for a pattern that seems to repeat itself. Second, you become an author. You write a strict, testable rulebook for that pattern. When to get in, when to get out. No gray areas. Third, you're a historian. You go back in time and test those rules on old data to see if they actually would have worked. And fourth, you practice. You use fake money, paper trading, to get your execution down without risking a single real dollar.
And really, this is what it all boils down to. This is the big takeaway here. Trading success doesn't come from some secret indicator or a gut feeling or being smarter than everyone else. It comes from creating a business plan that has a mathematical edge and then having the ironclad discipline to execute that plan day in and day out, no matter how you're feeling.
So, I want to leave you with this final thought to chew on. In trading, and hey, maybe in a lot of other areas of life too, what could you really achieve if you let go of that need, that ego-driven desire to always be right, and instead just focused on the quiet power of being disciplined?